All right, bet. Round two. What up? Can I see? Oh yeah. All right, bet. I'm gonna run through this real quick again because I just ran through the candlesticks, and I'm on a short little time schedule anyways. But I ain't tripping. It is what it is. With this video, I'm finna go through. Boom. This is exactly right here. I'm going through the reversal patterns. I just said that I was gonna do support and resistance. No, we're gonna do this reverse chart patterns cheat sheet. I might end up throwing the support and resistance. I might have to throw it in anyways through this video, but I might just like make another video and like post it before this so that way it all lines up in the end. But these are your most basic reversal charts that you can use like every single time. All of this is beginner friendly. Nothing is hard about this. Like a baby could figure this out. Like this is not hard at all. You see up here, I'm gonna just get straight into it. You see up here, I don't know if y'all really remember on the last video, I was on my market structure video, I was saying you go up, you make like a double top. This is the double top. That break your structure below, and then you start heading down, head and shoulders, wedges, triangles, triple tops. Oh, excuse me. I'm gonna just run through these real quick. So where is it? Hold on. Here go my slow computer. All right, there you go. Freestyling with basic patterns. So I'm really just going off the top of my head because like this is not really hard for me at all. Like going off a market structure video, you got your high, you got your low, you got your high, you got your low, and then you got your high. When I say break of structure, this is the break of structure. And this actually is a pattern stick. This actually is a pattern stick candle. I say like write this down or like, take notes on this. This candlestick pattern right here is the most basics. I'm gonna put a name on this. It's called break and retest. Because I mean, like it's simple. Like you're gonna break structure, and then you're gonna retest that structure. Uh-oh. Right here, break and retest. You're making a high, you make a low. You break that high, you need to get in on the pullback. You do not chase the trend. If you see this break above, and then you start seeing like small little candles, that's not a reason to get in. You have to actually see the trend like start like going back into a pullback a little bit, and then you make your entry. You usually make your entry somewhere within that pullback, which it just depends on like what's going on at the time. You use candlestick pattern, you use support and resistance that's on the chart, or that you find on the chart, and then you have like a nice size stop loss. You have a nice take profit. This is a 4-degree risk to reward. Like that's keeping it so simple. Like that's the most basic you can get because you don't have to do nothing else but just look for the break and retest. Hold on, first. All right, good. So now my next pattern, I'm gonna go up move, down, up move, pull back, up move, pull back, up move, pull back, up move, but we don't break a high. You probably see a double top. You wait for that structure to get broken down here. That's your confirmation that this is a double top. A double top, you can put a line on the top of it. That would be resistance up top. That would probably be like a strong line on the daily or on the weekly or something like that. That's making it go down. And once you see this break below, this break of structure right here, once you see it broke that line, expect for another retest. Always expect a retest. No retest, no entry. You expect that retest, and then you see it start going down again. You see it break this next low. So that next low will just be another line. Assume that this is a line. Assume that this is a line. You got them breaks. You probably get like a nice pullback up. You probably come down here, break this next line, nice pullback up. You try to come down to break this next line down here, but it just stops and it's having a problem. It's having a problem trying to move. It looks like it's stuck down here. So you know what you can expect next. Break of structure. It breaks the structure, probably breaks it very aggressively. And like these moves, like remember I was saying, like you have to just wait for the pullback because price could come up here, or it can come all the way up here, or it can come all the way up here. But it doesn't matter. You wait for the pullback. You see how far the pullback is going. You look for your entry. Assume that it'll probably come back right here. It actually wouldn't. Like it wouldn't really come back right here and then go up. In some scenarios it will, but understand for the most part, it has to like at least like come back. Like it has to break structure, make structure, break structure, make structure. But that's the most that's second. Because those are the most like simple ones that you'll see. Break and recess, double tops, double bottoms. This is a double top right here. You see price reversed. You would actually get in on the break, which is right here. That look gray line. Have a nice size stop loss. Have your take profit just wherever you want to go. You know, a lot of people say go by structure. I always say go by structure too. So this is structure because you see left, it formed that structure over here. Come down here. You see another line broken. Come down here. You see another line broken. Assume that this is an actual trade. Like you would have risked 67 pips for 261. So that's a good way to like really identify them. And of course, like I'm gonna go through these through the charts and just run through them. All right, so double top, double bottom. Wait for the break and retest. This is an example of break and retest. You see the low broke. You might get a retest of that structure that it broke, being like up here or something. Then you might come down here one time. Then you might see another double bottom before you see another break. Get a retest, and then you take on to the other side. I know that's ugly, but you know, yeah. So that's that. The second, I would say the third most common pattern, everybody's favorite for retail traders, new traders, and pro traders. You got your up move, you got your down move, pullback, you got your up move again, you got your down move, pullback, you got your very aggressive up move, you get a bearish engulfing candle, you get like a very big aggressive like down move. And then you probably come back up again to retest that structure. Then you break another low. And then you pull back again, fall back down. Draw the lines. So this is structure down here. This is structure down right here. Because you see like it bounce, it bounce, it bounce, it bounce. And then up here, this is structure again. This pattern is called head and shoulders. This is your shoulder. This is your shoulder. This is your head. This is a great pattern because you'll already see this forming over here. And then you'll see this big push. Once you see this push up and this very aggressive push down to follow it, you could probably say that like price was like just skating his way up. Price was just like slowly making his way up, but it never made, see, like it did like this, pulled back. It was skating its way up real slow, and then it just took a very hard follow. And then it came back up to retest the structure that it broke. That's your chance. That's your entry. Always off of a pullback. You get in, you're not too sure. Like you put your stop loss above the high. Yes, this is 141 pips, but look at the reward, like depending on where you hold it to. Like if you hold it to this next structure, then that's about like 190 pips. If you hold it to this next structure, then that's about like 320. And remember, like these patterns, you'll see them throughout time frames. But the money is made on a higher time frame. The higher you go, the more money you make. You just have to wait a little longer. But I mean, like, come on now, patience pays. So that's Head and Shoulders. What was the next one? Bearish wedge and bullish wedge. Let me do bullish wedge. That's very one that's pretty common. So this is a trend line. If you see a trend, like you can use this to identify what trend is going. That's like a downtrend. This is an uptrend, you know. Yeah. So let's say we got a wedge. We got price doing this. Price is doing this thing, is making lower lows, highs, lows, highs. So the wedge would actually be this. It's going down. I was supposed to make it squeeze in. Okay, that's a decent squeeze. So go in like that. And then you probably have like some lines going like that. So if this is a bullish wedge, you would expect the break of this trend line. You'd expect it to come back to this trend line somewhere in that area, and then you start making your way up. If you notice, see what I just did. This is structure at the bottom. You see the double bottom right here. This is structure to the top side because you see like it came hit that structure. It came made a pullback. It broke down and came back up again. It tried to pull down again, but it just couldn't make it. So it broke this trend line and broke this structure right here. So you see it broke. You see it made the break. You seen it came down for the retest. Like in natural, like in most charts, they would definitely look like this. So you'll have your stop loss maybe like at the end of that trend line, and then you can probably like start taking it up. This is good for reversals. Bearish wedge works the same way. The triangle is pretty much, it's the same thing. It's just that the support and resistance lines there's going like two different ways from each other, or the trend line. I'm sorry. So no. We got price doing this, making its way down, doing this thing, making its way down. Excuse me. The triangle will probably be like this, and then this one will probably be like that. This just gives it a little more breathing room. Now you can still, like, it's the same concept. It's just that it's further. So you'll probably see like a double bottom in this area, something like that. And then you start seeing it make its way up. The only difference between the triangle and the wedge is where you get in at. Because for the wedge, you see we got down pretty low when it broke that trend line. But for this triangle, you had to wait a long time for it to finally break that trend line. So your entry would have been like right here. You could have had a nice stop loss. It just depends on where you want to put it at. Oops. You could have had your stop loss way down here if you're gonna swing it up high, or you could have just had it just like at like nearer structure, which would have been like down here. So triangle patterns are cool. Triangle patterns are like real good for reversals. So double top, head and shoulders, wedge, triangle, triple top. Triple top will show you more of the consolidation that I was talking about one time on my one video, where I was saying you'll have like aggressive up move, you'll have a big up move, you'll have sideways motion, you'll have a big down move. Now this, oops, let me say bit. I need to tell my boy to come in. Hold on quick, y'all. I'm not even cropping this part out. Hold on, y'all. My bad. Here we go. All right, let's get it. So on one of my first videos, I was saying like you'll have that little up move. So you'll have the up move, sideways motion, then like a down move. This is a perfect example of it. You got up move, down move, pull back, up move, retest structure. I always retest the structure. Up move, and pull back. Up move, pull back, up move again, pull back, up move again. Now this is the same thing as a double bottom, double top. It's just prolonged. So it's like a longer like type of double bottom, double top. These are the ones that you pretty much got to watch out for because now you're actually sitting in like a consolidation range where price isn't really going anywhere. And like with a double top and a double bottom, they're instant. Yeah. So a double top and double bottom, that's instant. So like as soon as you see the break, then you know when to get in. In these situations, you don't see a break, and that's hard. So like you see a double top and you see a double bottom. In this scenario, what do? Why I keep doing that? In this scenario, you pretty much you just gotta wait because like even though it is a triple top, you could make a triple bottom. Like it just depends on like how like long it stays in this range. But keep it simple. Like just assume that you see a triple top, and then you finally see that breakdown, and then you see it retest that structure that just came from, and then you start seeing it make its down move, retest structure, down move, retest structure, down move, and that's exactly like how this is a picture perfect example of how the market would move. It would do the same thing if it was down, like if the consolidation was at the bottom and it's going up. So it's not always gonna move up, right, down. Sometimes it can move down, right, up. It just depends on like how you're looking at the time. So those are like basic like reversal patterns. That picture and that candlestick picture, I definitely need to like keep them. So let's plot some of these on the charts. Go back to the chart. There we go, the charts. I'm gonna go to the 4-hour, and I'm actually going. No, this is cool. I ain't gonna spend too much time on this video. As I say on every video, support resistance, support resistance. Look at the touches. Look how it break up. It came down, rested, came up again. It broke down right here. You can say this is like a this actually breaking structure because this line paused and then it came back real aggressive and it broke it. And then, so it broke it, came back, fell down right here. It's another level. You see it came back up, tested structure, broke down again. This is like new structure at the bottom. It came back up, retested. Then it almost broke that one. It broke it right here. And then it kind of fell down, break and retest. It broke up right here. It came back down. And then we started like trying to make our way up again. This is a nice little area too, because you've seen it broke down and it came back up and then it broke down. So areas inside the areas. We're going to zoom. I'm actually going to go to the 1 hour for this to show some nice patterns. Oh my goodness. Why is it messing up? All right, but man, bro, what's going on? I think my laptop got a virus or something. And bro, so sad. Like I just got this laptop not that long ago. All right, so let's give an example of a wedge. I see you can low-key see a wedge right here. So we got price going up like this. I'm gonna do another video on trend lines, but trend lines, you pretty much like it just depends how you want to draw it. Some people draw it wick to wick. These wicks they all connect, and then eventually it'll get broken. And then this one, I'll draw from wick to wick, like this way. Now that's more like a channel. I'll do it from here, from wick to wick, and then it kind of broke. See, it kind of broke right here, but for the general idea, like it broke and then it came right back in to finish. and then you see like it broke to the outside. So this is a perfect example of a bearish. This is a bearish wedge, I believe, because the price is making its way up, and then you finally break out of the structure right here, and then you have like a smaller retest. The retest is actually very small and it's quick too, because this is the break. Once it breaks out of this actual line, this is the break, and then you see the retest. It actually retests the support, or support and resistance, but that's still a retest. And then you start seeing the fall to the downside, very, very aggressive fall. That was a nice example of a wedge. Let me look for my favorite double tops and double bottoms. Okay, this is a decent example of a double top, double bottom. I don't like how it broke right here. I'm actually gonna look for another example. They got to be perfect, because you'll never know who's gonna see this video, and I don't want them to like. I don't even want to mislead them just a little bit. Like, I don't like these. Hold on, let me go back. Let me go back. Bear with me, y'all. I got my homeboy outside waiting. I ain't gonna lie, man. Bro gonna have to wait. I gotta get these videos out the way. Bro, I feel like I passed up a bunch of good patterns just to find like an extremely nice one. That's kind of hard to see. No. This can be an example of a double bottom right here. You see how price came in this way? Price made a nice little down move. It came down here to the bottom. It rose up a little bit and came back down again. It's kind of wide out, but that's still a double bottom. And then you see the break. This right here will be the break. Kind of ugly, but I mean, it's still a good example. Another way you can do double tops and double bottoms. Double bottoms would be W's. Double tops would be M's. So this would be a W pattern. This is the middle of the W. You watch the break. That's where you're getting on the break. And if you would have got in on the break, you waited till that close, you could have took it up all the way up here. You actually could have took it up here for about like 79 pips. So like double tops and double bottoms, like always my favorite, because it's so easy to see. This is kind of sort of a triple top. These are hard to see. Like once you like really like stay in the markets, you'll get an eye for them. But look at how many times. I wouldn't necessarily say this area. I'm gonna bring it down right here a little bit, and now you can kind of see the triple top. Boom, 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 and then we started making a nice aggressive fall. And then also, I would say that's a triple top, but if you want to be technical, that low key is a Head and Shoulders. Just by how we made that move. You see how we came up, and then we came down, and then we came up even higher. I'm talking about the wicks. Like we made the up move, we came down, we made a higher move, and then we came down. But when we came down and broke structure, and then we came back up for a retest for that right shoulder. We came back down, we still retested the right shoulder. That's the entry. That's the exact entry. That always a retest. Even that right shoulder on the Head and Shoulders pattern will still come back and get retested. So you could have got in right here. Why is my stop loss so great? I don't know. Bring that down. Assume you put your stop loss at structure, which is like that 50 pip move. You take it all the way down. Oof, if you would have held, but that would have been like 500 pips. Why did it move so aggressively? Hey, GBP, JPY be moving. I never really traded like that. I didn't know it was moving that crazy. So Yeah, that's a cool one. This right here again, this is a wedge again. So you throw tread line, you come right here, throw a tread line, you wait for the break. That was a nice aggressive break. This was a nice aggressive trade. You could have got in right here on the opener of the candle. Excuse me. Have your stop loss back here at the trade line. You did risk about 125 pips, but you took it up to structure, which was about 269, and then you let it go to the next structure point, which is a 3-to-1 risk to reward. Like, come on now, man. It's too easy. This is a nice little example of a triple bottom and consolidation too. Let me put this vertical line right here, and I'm gonna put this one right here. Now you can kind of see this pattern that you see right now is the triple top that I did earlier, but in reverse. Look right here. You got a down move, you got a cooler up move, you got an aggressive down move, you got like small little pullbacks within, then you got the final down move. And then you got an up move, it didn't really break anything, and then it come back down again to retest structure. Don't worry about exactly where it comes back to, just know it came back to structure. And then you probably made like a thin little up move again, you pull back again, and that was your triple bottom right there because it retested. Well, it retested this third time, and then you see the break. You see the break up. Well, you see the aggressive break up, and then you'll probably see it come back down to test structure one more time, and then it kind of went up again. It didn't make the retest, but you see that it did make the move that it was supposed to make. Well, it actually consolidated for a long time. And then finally broke out. So, yeah, let me go to the 4 hour real quick to show like better examples because like everything looks different on different time frames. Like now on the 4 hour, you can do the wedge again. You can say like down here, and then you can have this trend line going like, that's actually kind of ugly. This actually would have been like a triangle in a sense, or a channel. I'm gonna throw out this tool real quick. It's a channel because look at how many times it bounces. Oh, here it is. Look how many times it bounces. It started up here. We had like a bounce down here. Oops. Bounce over here. Bounce over here. Bounce over here. Normally we would expect it to like a down move, but just see the bounces like this, like a good example of like a channel. A channel is a pattern that wasn't on this list, but you can see like boom, move here, move up here, move up here, move over here. It was actually supposed to be a 1 right here where this 2 is. I kind of messed up the triangle, but I mean the little pattern, but it's all good. So that's just the basic run through of like most basic reversal patterns that you can find. This picture, it definitely has to get dropped in the link or something so that way people can look it up. That's it. I'm done. Let's go. I got more videos on the way. Stay tuned.